Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, which is our passion, my passion anywhere. With our SPY and ES mean reversion systems with about 90% winning trades. And of course, our amazing KISS trend systems, which I'm hoping to update that next phase this week. Hope everyone's had a nice weekend. This video, you don't see me on camera this time. My computer died, so that's where I had my webcam and all that. So again, no big deal. I'll set that up sometime maybe later this week, but you won't be seeing me on camera today. Again, the KISS systems, guys, if you haven't done so, go to the KISS tables. Amazing systems there, amazing stuff. If you haven't been following those for the last 1.5 years, you've been missing out greatly. And if you're just a YouTube subscriber, definitely consider subscribing to us. You'll be amazed at our analysis, the detail of it, the alerts for our mechanical systems, stuff like that. Anyway, let's get back to the newsletter. It is Sunday, June 23rd. Market futures just opened. Futures are up a few points here for ES and NQ futures. This is our back-end recorder for our standard web page subscription service. So I'm going to get that recording started now for our folks. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, hope everyone has had a wonderful weekend. It's hot here, it's like 100 degrees. I'm here near St. Louis, Missouri. Anyway, it's been 10 days or so since I did my last newsletter video. I've been out of town, as you know, in New York visiting family and a couple business colleagues for Breakpoint Trades as well. So it's been about 10 days since, again, you've seen me do a newsletter or video. Steve's been filling in since that time, doing a great job as always. Anyway, this newsletter, again, it's Sunday, June 23rd, and this is the comprehensive weekend newsletter. Again, the table of contents, same general theme as I always keep. We first have our opening statement. We then go through some administration things. I'm going to talk about the KISS systems, which hoping to launch that this week. It's been in beta. Discuss that in a moment. We'll then move to the general market analysis. We'll talk about the major indexes, S&P, NASDAQ, IWM small caps. Again, we do a top-down approach from monthly, weekly, daily to intraday time frames, give you our thoughts there. Quite honestly, no changes, guys. The trend remains strongly up. We'll also look at a few of the important market indicators, such as the VIX, the NYAD, high-yield corporate. We'll also look at the bond market and the 10-year Treasury yield. We'll look at a handful of major market sectors. We'll look at the U.S. dollar, Bitcoin, commodities, precious metals, and GDX. Also, I'm going to review some recent trade setups, and I added a handful of new long setups to monitor for this week. Like I said, I hope everyone's had a nice week. And again, no changes, like I stated, to the market. We're still favoring this as some sort of nested 1-2, 1-2, with us currently in this wave 3, which could have topped or it can continue going. So once we do get a correction, we favor that as some sort of wave 4, then another move to wave 5. Obviously, we have the 4th of July U.S. holiday coming up, and honestly, the markets usually hold up into that, so I'm really not looking for any big corrections or anything this week. Maybe after that, but we'll see something. But again, no changes in the uptrend, guys. Trend has been strongly up. KISS systems have been following that. That's the beauty of the KISS systems. Precious metals are in a bull market, gold and silver. But that said, gold does look a little vulnerable to me. I'm looking for a little bounce here in the short term, which we're getting here as the futures open. But if it loses a major support area, I think it could have a quick drop down to that next demand zone. Okay. Again, the KISS systems, guys, have been an amazing resource for the last 1.5 years. I sincerely hope those of you who are subscribers have been utilizing that valuable resource. They're 100% mechanical systems. They tell you when to get in, where to set your stop, when to get out. Just been awesome. And let's go ahead and talk about that. So, first image below, item number 2, this is an image from the website. Again, on the systems area, and if you've been under a rock, the KISS systems are located there. All the systems are under that systems tab, which makes sense, such as the SPY ES mean reversion systems. The KISS systems are right at the top there. When you go there, you see a table here. So various baskets. We have the BPT baskets, all the S&P 500, all the NASDAQ stocks, 120 ETFs or so, all the Dow Jones stocks. We have a bunch of popular stocks and miscellaneous, and you have your favorites. Okay. We also have daily and weekly. Okay. And I'm working on this high performance and of course SMS. I've been beta testing the high performance with a couple of subscribers over the last week, and that's helped us find a few bugs and stuff that we didn't see. But we're just about, we fixed a couple major issues last week, so I'm really hoping to launch that sometime this week here before the 4th of July. I'll be doing a special video on that once I do so, emails, stuff like that. So there'll be a whole thing. It'll be a subscription service. But anyway, here on the daily, you can see, again, systems have kicked ass essentially. You can see Amazon and Microsoft had new smart trailing stops generated last Friday. You can see the current trade. Amazon's up about 1% or so, 0.9%. But the previous trade, it made 34.69%. Again, those aren't back tested, guys. These have been on the website for a year and a half. Microsoft is currently up 5.4% on that May 20th entry, and the last trade is up about 19%. You can see all the other systems that are long. Nvidia, it's up 41.6%. You know, that's been on fire from its May 3rd entry. But the previous trade before that, it made 63%. So look at all those nice gains. Again, awesome resource. You know, the beauty of the KISS systems, they're trend following and they're swing trades. They can last for many days and weeks. So it's not you don't have to be a day trader. In fact, these are not day trading systems at all. Easily to work a day job. If you're a doctor, a lawyer, a professor, you know, whatever, you're a construction worker, you could trade these systems because they hold for days and weeks and months at a time. Okay. And you got their protection. Next. Image number 3. So again, we also have the weekly versions of the KISS systems. I show in image number 3 here. You can see the tab highlighted. And again, they're the same as the daily, guys. It's all fractal. Obviously, the weeklies hold for longer periods of time. They have wider stops. There's some give and take there. But the weeklies, because the trends have been so strong, look at some of these weekly gains here. Google system went long back on, let's see, what is the entry date here? January 20th, 2023. So a year and a half ago. And that trades up 83%. Microsoft went long on January 27th, 2023. It's up about 84%. And look at some of these trades. Nvidia system caught that long on October 28th, 2022. That's up 818%. Awesome, guy. There's AVGO up 199%. Amazon up 54%. So those of you who, you know, really want a longer term system, these may only do a trade once every 1 or 2 years. And you can see how effective they are. And you still get that protection. Next, image number 4. So this is the high performance section that'll be coming. There'll be about 20 or so different individual ETFs and stocks here. And again, the high performance KISS, these are intraday, so smaller time frames. So instead of daily and weekly, you could see the minutes here, 65 minute, 130 minute, 78 minute, you know, stuff like that. So they're intraday, and so they get more trade opportunity. But you can see some of the open trades now. Microsoft 65-minute system had a new smart trailing stop generated on Friday. System's up 8.25%. But if you notice here, the nice thing about these is we're going to include detailed stats. So you can click on the stats button next to each of the system. So let's just show you an example of that. So here's XBI. That's the biotech ETF, 130-minute system for the high performance. So you can see the various stats here. You can see the yearly gains compared to buy and hold. For example, this is up about 6.87% for the year. It's beaten buy and hold. The average annual gain is around 29% for this system. We also have the individual trades. You can look at all the individual trades. There's something like 270 trades on this XBI system, and there's a profit curve. So you'll be able to get that. And again, guys, you'll also be able to receive, we're going to give SMS text messaging for free for anyone who subscribes to the KISS section. So these will alert you intraday, because they can do trades intraday, not just at the close like the daily and weekly. So you'll be alerted by SMS. The daily and weekly, we're going to keep those as email. All right. So again, looking forward to this. We're pretty close now. Hoping this week. Next, going back to the general market newsletter. So here's the index sector table, what transpired last week and on Friday. Friday, you can see kind of a bifurcation day. It was also quad witch options expiration, so a little volatile. For the week, though, major indexes ended higher. The Dow actually outperformed. It's been underperforming, so not surprised, up 1.45%. S&P up 0.6%. The NASDAQ lagged a bit, anywhere from flat to up 0.2%. And the small caps were up. As far as the 21 market sectors we follow, for the week, 18 of the sectors were up and only 3 were down. Okay, utilities, basically a defensive sector. Semiconductor was down. That's been up so much, so got overbought. So finally it's pulling back a little bit. And home builders, but everything else up. And the strongest sector last week were the oil services, up 3.5%, followed by transports, which is up 2%. Currency-wise, US dollar up 0.36% for the week. I'm going to show a chart tonight, the weekly chart. It's been forming a large coil pattern. We'll see which way that breaks ultimately. Cryptocurrencies, they're weaker here. As you can see, Bitcoin is actually down here on the weekend, and it was down last week. Commodities, the DBC was up 0.5% for the week. That's the index, largely dictated by crude oil, which is up 3.4%. Gasoline had a big jump as well. Natural gas pulling back. Copper's had a heck of a pullback lately over the last couple months. It's below its 50-day moving average. Also weakness here in the agriculture area, corn, wheat, etc. Precious metals, gold down about 0.75% last week, while silver was up 0.5%. GDX, the miners, were up 1.75%. So they are outperforming. But I do think this area could be a little vulnerable, but it needs, if it loses the support area, I'll be showing when we get to that section. And as far as the bond market, we continue to see the rally here in the 10 and 30-year Treasury yields, up about 1% for the week. Next, item number 7 shows the economic news calendar. So quite a bit of docket now on the news for this week. So nothing really on Monday. On Tuesday the 25th, we have S&P Case Shiller Home Price Index, Housing Index. Then on Wednesday, MBA mortgage, new home sales, crude inventories, initial jobless claims. That's on Thursday, GDP, durable orders, etc., natural gas inventories. Friday, personal spending, PCE core, Chicago PMI, so inflationary data. We'll see how their market reacts to that. Okay, let's go and jump to the index charts. First chart below, item number 8, is a snapshot of the 5 major indexes as a monthly chart. So again, we're up once again here. We had a nice, strong May, as you know. So the sell in May go away. Well, we were up in May. And so far, we're up here in June as well, as you can see on the major indexes. New all-time highs on the NASDAQ 100, on the S&P, obviously not for the Russell, which has been struggling here. By the way, guys, on the Russell, I believe that the Russell is best set up this year to play catch-up. So it is underperformed, but I think this, if I had to go long one of the indexes, get a trigger, to me, this index has the most potential for percent gain. The Dow here has been lagging here as well, but not as much as the Russell. Next, number 9, here's the weekly view of the major indexes. You can see the Dow here has just been shopping around for the last, last 3 months. S&P, the upper Bollinger Bands, same for the NASDAQ so far, closed with a weekly doji candlestick, so a little warning there short term. And here's the IWM consolidating small caps. Here's the daily indexes. So again, we've been right in the upper Bollinger Bands on the S&P and NASDAQ in particular, pulling off a little bit late last week. The Dow here, it's been consolidating. Bollinger Bands are starting to pinch, so energy is building. Next, let's move to the individual indexes. So here's the S&P 500 weekly chart, again, which is up 0.6% for the week. No changes, guys. One heck of a move since the 2022 lows, as you know, and one hell of a rally from the October 2023 lows. By the way, that's where the KISS systems went long on the indexes, catching that uptrend. We had a nice little pullback there in April, but higher low, which we were looking for, moving average ribbon pinched on a bullish configuration, and we've continued to rally. That said, this new high, we do have some very obvious MACD divergence there, and on the RSI, unless that gets blown away. Clearly, it's a difficult area to be jumping in long on these indexes if you haven't been long already. Again, you've already should have been long based on the KISS systems, which have been long. Tough to jump on board here, quite honestly, unless you're looking at the Russell 2000, which isn't overbought. Looking at the bigger picture, here's the monthly view of the S&P. Again, just showing this back to 1994. This is a little mechanical system that we have based on the stochastic 14 setting and the 50% area. This 50% area tends to be the dividing line between bull and bear markets. When it falls below 50%, you're typically in some sort of bear market. When it goes back above 50, you're in a bull market. You can see how well that worked, especially in the 2000s, into the 2008-9 time frame. And you can see that stochastic holding that 50% that whole time from the 2009 lows. That became support. It lost it in 2022 during that bear market, but then it came right back above the 50% area in late 2022 to signal a new bull market uptrend. Okay, this uptrend channel from the 2009 lows is a good guide. Again, on some sort of blow-off move on the market, which I think will probably end with, sometime in the election, after the election, whatever. I do believe 2025 could be a trying time for the market, maybe a bear market, but again, otherwise, maybe one target over time would be the upper channel line here. Okay, maybe up around 6,000. Chart number 13, here's another monthly view of the S&P. This is another mechanical system. I'm not a big fan of moving average cross systems because of the lag, but on a monthly chart on the S&P 500, the 8 and 13 EMA crossover is pretty damn good. Just take a look at this, going back to 1999. And again, they're never going to get out at the highs or get you in at the bottom, but overall, look like this has caught maybe 70-80% of those uptrends, kept you out of the 2008 bear market. And even during this whole uptrend from 2009, moving averages have never crossed except here in 2022. But then they crossed right back to get you back in that uptrend. So very effective monthly chart, 8 and 13 EMA on the S&P 500. Next. Chart number 14, here's the weekly KISS system. So remember, we have the weekly KISS system. So again, wider stops. Again, these have all been long for quite a while. Again, stops are wide here still. S&P stop is 50.34. IWM, it's 187. Triple Q's 433. It jumped up a lot the previous week. And on the Dow, it's 376 on the DIA. Chart number 15, here's the daily KISS. So again, great example showing you how the system went long back in March 2023, rode that uptrend until August. Had a little whipsaw there in late August, early September. Again, its risk was defined, so you had a small losing trade there, which is what the system does. It keeps the losing trades small when they occur. It then went back long, just a couple days off the low on the end of October there, rode that entire uptrend into early April, got out, got back in, so the system righted itself. And it's since that entry in early May, it's raised its stop 4 times. Current stop is 52.94, 52.95. Short term, we have a DeMark 9-13 combo here, so we are a bit extended. Moving average ribbon here is also pretty wide. Moving average ribbon is always a great visual. Also, you can see that first pinch squeeze after it went to a bullish configuration there. You had that first pinch squeeze there in early June. That's almost always a great low risk buy opportunity. And you can see happened to correspond with price right near the ATR. Played out beautifully. Again, short term though, wide moving average ribbon, DeMark 13. So just a little cautious here short term with that. Next, chart 16. Here's the KISS daily on the website. The one I showed you above is a custom version, sort of a high performance daily, but this is the one from the website. And the stop, I'm showing you this because you can see the DeMark 13, but the smart trailing stop's a bit tighter at 53.37. Next, chart 17. Here's the 4 time frames. So the daily at the upper left, we have a DeMark 13 as I already discussed. ATR support on all the time frames, obviously, right? Even on the 78 minute, we've pulled back, we're still holding that. So that's your current support, is the ATR. Next, chart 18, here's a half-day chart of the S&P. So this is that wave count, this nested 1, 2, 1, 2 we've been discussing. So you have 1, 2, 1, 2, 3, 4, working on a 5 of 3, okay? The alternate view would be you have a 5, a high here, and then we start a bigger correction. That's our alternate view. We're favoring more of this. If we get a pullback here, we're viewing it as a wave 4 to be another buying opportunity for then another push again in a wave 5. Okay. Chart 19, here's a 60-minute chart. Again, we broke this little uptrend line late last week, but otherwise we haven't lost any major big supports. Moving average ribbons pinching here a bit. Chart 20, here's a 15-minute chart of the S&P. You can see the supply zone, which we stalled out a little bit last week. If we weaken here early this week, there's a big demand zone, support zone down in here, which could be an area to look to go long again. Again, especially prior to the 4th of July holiday. Next, chart 21, here's the NASDAQ triple Qs for the week, up 0.2%. Essentially, you got a big spinning top doji candlestick, so it definitely looks a little vulnerable here short term. Here's a couple of these wave counts I've had in place. You know, one view would be a wave 3, 4, and this is a 5. Once that ends, this could end this uptrend for quite a while, or this could still be a 3, then a 4, then a 5. Chart 22, here's the daily KISS system, just like on the S&P. It's done an awesome job here. Here's an example of this KISS system getting out right here in, it looks like into May, and then getting right back in a couple days later. Okay, smart trailing stops, one's 467.25. So nicely protected there. Moving average ribbon is a bit wide here. Okay, just be aware of that. Chart 23, here's the 4 time frames. The daily up here, you had a DeMark 9. Wide moving average ribbon, you can really see that there. That may need to be worked off a bit, guys. So that's why I'm a little cautious on the long side a little bit. DeMark 13 there on the half day, which we're pulling back a little bit from. Next, chart 24, here's the daily triple Qs. Again, same count here we're showing on the triple Qs as the S&P, where this could be a wave 3 of 5, and a deeper pullback is a wave 4, but then yet another move up again to a new high in wave 5. Chart 25, here's a 2-hour view. You can see this up here is your supply zone. We're kind of chopping around here, going sideways, and if we do weaken, guys, there is an open gap down here to monitor. This is your resistance up here. Chart 26, here's another 2-hour chart. Just showing some trend lines here. This is your longer term support trend line down here. And chart 27, here's a 15-minute chart. You got a supply zone up here. Here's some fibs where we bounced up into last week, pulling back. Next, chart 28, IWM small caps. Small caps are up 0.8% for the week. Again, you can see small caps, they've underperformed. They rallied strongly from that October low into this supply zone where they found initial resistance. Okay, right now they're just kind of chopping around here. Chart 29, here's the daily. So under this, we show a 1, 2, 3, 4, and a 5. you can see prices pulled back from that resistance trend line into a demand zone. So this is a support zone. One could be long here with a pretty tight stop, maybe below the 197 area. You might want to see where the KISS system is. If it's long, it's on the KISS tables. But this is what I mean by my opening comments, guys. The Russell is underperformed. And I think as long as the market holds up this year for a while, I think the Russell could play catch up, and this could be a bigger percentage move than you're going to get on the S&P and triple Qs now that have already had big moves. So if this goes up to make a new high in a wave 5, I think this is going to be a bigger percentage. So I'm focused on this area on the indexes for a nice swing trade. All right, that does it for the major indexes, guys. Let's go and move on. So chart number 30, here's the VIX. VIX has been chopping around here lately. You can see it stalled at the supply zone up here in late May, pulled back into a demand zone where it's attempting to bounce a bit. The supply and demand zones are very powerful. But we've been utilizing these over the last year, and hopefully you guys have started to learn how to define these for yourself as well, because they're very effective versus just straight standard trend lines. Chart number 31, here's the VIX 15-minute chart. You can see last week it did bounce off a demand zone. Right now it's has a little sort of an uptrend here. Chart number 32, here's the S&P with the McClellan oscillator, the NIMO right here. Just showing you this because we have some divergence here. You can see this went negative in May, and it has remained negative below zero while the S&P continues to make new highs. So you do have a divergence there just to be aware of. That's not a sell signal on its own, but it is something to monitor. Next, chart number 33, here's the S&P 500 versus high yield corporate. As you can see this chart, both of them, notice how well the two move together. They're very correlated with each other. That said, you get divergences that show up from time to time, like back here last year in the July time frame, the S&P had a higher high yield corporate had a lower high, and that led to that market correction. Then at the October lows, you had a lower low on the S&P, higher low on the high yield corporate. That gave you an indication that you had a good bottom there. Right now, we have a slight divergence here with the S&P at a higher high yield corporate at a lower high. Again, this could be blown out, guys. If high yield corporate rallies this week and makes a new high, this will be negated, but it is there at the moment, so be aware. Chart number 34, here's high yield corporate itself, kind of wedging up, so we'll see what it does this week. Moving on to the bond market, here's the 10-year Treasury yield. Pulling back here a bit, still in this little channel we've been showing. I also added some fibs down here. 61.8 fib comes in around the lower channel line. Chart number 36, here's the 10-year Treasury yield on the weekly. So for the weekly, it was up 1%. It appears to be forming some sort of coil pattern here, as you can see. Chart number 37, here's another weekly chart. If the rates have another move down, that would help spike the market again. This is maybe something I could see like this, where you pull back like this, form a higher low, then you rally again later in the year. It's one option. Chart number 38, here's the big picture chart going back to 1980. This is a monthly chart of the 10-year Treasury yield. Again, interest rates, guys, were in a secular bear market for essentially 40 years from 1980. That ended in 2022 when price finally broke through this 35-year channel. The new normal for interest rates are up. Okay. That said, it's not going to go straight up or down. In fact, if it were to pull back here pretty good, you got a big support now around this 3.25%, 3.5% area. You see that? Big resistance here at around 5%. Again, the new normal is higher, guys. Don't expect interest rates to go back down here near zero like they were. That is over. Okay. And again, that's not a bad thing. Think about it. Think people like my mom who don't want market risk, they can now get 5.5% in CDs where they couldn't get that before. So I actually like that. I hated when rates were at 0% essentially, and the bank was paying you, 0.2%. Nice to get an interest rate now. And chart number 39, here's TLT 20-year bonds. Again, they move opposite to rates. Remember, they broke out of their channel back in first day of June, successfully back-tested the channel and been moving higher. Next, let's do a quick snapshot of the sectors. Just going to look at a handful. Here's XLK Technology. Again, little pullback, still above its 9 EMA. No MACD divergence on any of these guys. So even though we got a little overbought here, there is no MACD divergence. Again, XLK though, two stocks make up almost 44%. Microsoft and Apple, just two freaking names. Chart number 41, semiconductors, they also got overextended with it. NVIDIA, as you know, pulling back a little bit here as well. 20-day moving average would be your first support. Chart number 42, here's the transports. Right now, the last rally stalled the 50-day moving average. They've been underperforming since March, as you know, I've been pointing that out. Right now, they appear to be coiling. Let's keep an eye on this sector. Here's a couple stocks in the transports. FedEx, nice little pattern here. Tried to break out there a little bit on Friday on some expanding volume, but one to watch if the transports bottom could be lower risk. And chart number 44, EXPD, another stock in the transports. Kind of a cup and handle look, good volume profile. So those are a couple to monitor, guys. Chart number 45, here's the banks. They've been lagging here a little bit since May. Here I added a support trend line to monitor. They are below their 50-day at the moment and the 20-day. Chart number 46, retail, been chopping around here. It's kind of got a coil look to it here. I didn't draw it in, but you can see it here. There's a lot of chop lately on it. Chart number 47, home builders, been chopping as well. They're still in this coil pattern, still hanging on that support for now. Home prices, as you know, are ridiculous. Chart number 48, healthcare. This has been a strong sector. It's now testing resistance once again. Honestly, wouldn't be surprised to see this break out. The other area, biotech, has been weak. It tends to follow small caps. If the small caps start to rally, I think biotech would be a good buy because they should rally with it. Remember, we got the high performance biotech system. Chart number 50, here's XLE Energy, been downtrending since April, still in the downtrend channel. It did bounce off its 200-day moving average last time. That was probably a good area to take a little shot, but technically it's still in a downtrend. Here's some names in the XLE, ExxonMobil, the big one. Nice correction from April. Still in this little downtrend channel. Here's the dividends. It reports quarterly. So it won't be a dividend now until June, July, August. Chart number 52, Phillips 65, another one. Nice correction from April. But nearing the 200-day moving average, you have some MACD divergence here. Good volume on Friday. This one actually looks pretty good, perhaps, for a shot at a long. And chart number 53, XOP, that's the S&P oil and gas exploration. It's down here around the 200-day moving average, one to watch as well. Finally, here's oil services. They outperformed last week, up 3.5%, coming down to this long-term weekly uptrend line that I've had in place. This could be a low-risk area to take a long with a stop just below that uptrend line. All right, moving on to commodities. Chart number 55, here's DBC, the index, up 0.5% for the week. Remember, it's still in this 1.5-year coil that has been forming. Energy is building. And that coil really shows up on this monthly chart. You can see the coil, very obvious coil. Moving average ribbon starting to pinch. So energy is building. MACD's recycled back to zero. This is a group to watch, guys, in the going forward. Chart number 57, here's the daily. Price had a coil here on the daily, which broke down in early June, bounced off the demand zone. Chart number 58, crude oil. Nice rally the last couple weeks, right off that demand zone. You can see the last time it stalled at the supply zone. You can see down there in December, rallied off the demand zone. Great example of supply and demand zones, just very effective. Price is now above its 50 and 200-day moving averages. That's good. Chart number 59, natural gas, had a beautiful rally out of this falling wedge that we had in place back in April. Stalled at the 200-day moving average essentially twice here now. That's your big resistance area. Jabber 60 copper down 1.2% for the week. Honestly, it's been correcting here for the last month and a half after getting very extended up there back in mid-March. Jabber 61, here's the daily. Again, you can see how extended it got. Look how wide that moving average ribbon got back there in May. It was parabolic there. It was unsustainable. Pulling back, and it lost its 50-day moving average there in early June, which then became resistance here. So this is still looks quite vulnerable. Jabber 62, DBA, nice pullback the last couple days. Remember, this was a demand zone, which price did bounce off of nicely in May. Pulling back here nicely though. One of the subscribers asked me to discuss uranium. So here's URA. This is the weekly chart, up 0.25% for the week. You had some nice MACD divergence there at the highs. Again, it's still in an uptrend longer term, guys, but you had a fairly nice divergence there several weeks ago that has been playing out. Here's the bigger picture monthly chart. So it's down about 8% for the month. Again, I became bullish on URA back in 2020 because of this multi-year base. You then had a beautiful coil that's set up. Price started breaking that in 2023. That was the area to buy it on a long-term basis. I'm still targeting this supply zone up into the 40s as a target over time. But again, that's going to take time, guys. This is a monthly chart. Next, Jabber 65. Here's Bitcoin. Again, Bitcoin is weaker here, guys, shorter term. My guess otherwise, the reason I'm showing you the weekly is I'm guessing this is some sort of wave 4 correction. Eventually, I'm looking for a new all-time high in a wave 5. Jabber 66, here's the US dollar, up 0.25% for the week. Remember, I discussed the weekly on my opening comments. I said it's forming a big coil, and you can see that clearly here. Let's move to precious metals. Jabber 67, gold, down 0.75% last week. Again, as you know, gold had a major breakout from this pattern back in March of this year. Gold is in a bull market now. Jabber 68, here's another weekly chart of gold. This is one of our best guesses at the wave count as a 1, 2, 1. This is a wave 4 of some sort. If gold were to pull down into this area, I think this would be a heck of a buying opportunity, guys. Jabber 69, here's the monthly view. Again, this has been my count that we're in some sort of, we broke out of this pattern. This was a major wave 4 correction we had that ended in 2022. And we're in some sort of wave 5, 3. My ultimate target on gold is up here around the 3,000 mark, guys. So it's in a bull market. Jabber 70, here's the daily. Again, it's been going sideways. You can see I added a support trend line here. Again, gold's up a little bit here this evening, but this is vulnerable, guys. If it loses this trend line, I could see a quick move down to the demand zone down here. But again, I think this would be a heck of a buying opportunity down here. Way to play a pullback in gold is GLL. That's the double inverse ETF for gold. You can see a resistance area right here, supply zone. Kind of flagging here. If it breaks through here, I'm targeting this area up here. Next, here's silver, up 0.5% for the week. Again, as you know, silver had a major breakout back in March from this bullish triangle pattern. Jabber 73, here's the daily chart of silver. Again, we broke out of that ascending triangle in March, back tested it in April, perfect ABC, and we've been weakening here. We're still holding that 50-day moving average. Jabber 74, here's the monthly, this is the quarterly view of silver going back to 1971. So you can see price pulled back off that first supply zone, okay? Ultimately though, guys, I think silver is going to eventually retest this 50 area. Remember, we hit that in 2011 during that last bull market high, and we hit it in 1980 when the Hunt brothers cornered the silver market, kind of like, you know, the Dukes from that movie Trading Places when they were trying to corner the frozen orange juice market. So both of them got their ass handed to them. The Hunt brothers and, of course, the Dukes ended up on the street. Anyway, but I think eventually we're going to test that area. But again, it's going to take time. Chartbreaker 75, here's the quarterly view again, but as a logarithmic chart. Here you can see this kind of ascending triangle that's been forming for 40 plus years. Next, Chartbreaker 76, here's GDX. Look at the miners. Miners were up 1.75% last week. That's actually a positive that the stocks outperformed the metal. You can see the last high did stall near that supply zone. Chartbreaker 77, here's GDXJ. That's the gold miners junior ETF. So similar look. That last high stalled at that last supply zone. Chartbreaker 78, here's the daily. Again, the daily here is still in a, even though this was up last week, it's in a downtrend channel, okay? So be aware of that. It's still in the downtrend channel. If the precious metals market does have a correction, here's dust. So besides GLL, which is the inverse ETF for gold, here's dust. That's the inverse ETF for GDX, the 2-time inverse. You have a kind of an inverse head and shoulder look to it, so one to watch. Chartbreaker 80, here's a major silver stock, AG Majestic Silver, that I put out on our watch list back in March. Had a really good rally up to the supply zone. I'm eventually looking to buy this again on this pullback. I think it goes, again, way up into these upper areas over time, but I need a trigger. Chartbreaker 81, here's the bullish percent gold miners index, which supports a correction in this area. Remember this one on a sell signal there a little while back in the overbought territory. It gave an awesome buy signal on March 1st there from the oversold territory. Very clean system, mechanical system. All right, guys, the final part of the newsletter, let's look at some individual trade ideas. So here's Amazon. It's been on our watch list. Nice move on Friday. By the way, the KISS system's been long, as you know. Chartbreaker 83, INCY. It's been on the watch list for a few weeks. Then just continues to move up steadily. Nice volume on Friday there. Again, resistance was that trend line break, which triggered on June 1st. Chartbreaker 84, here's NVIDIA. As you know, we had that 10-to-1 split. Then it had a heck of a run. Got quite overbought late last week, pulling back. Here is a demand zone down in here where we tested on Friday. The positive is that there's no MACD divergence here, so this could be some fourth wave type pullback that will result in a new high in a wave 5 once it's complete. Here's AVGO, that's Broadcom, also a AI type of stock, semiconductor, also got overbought, pulling back quite a bit. We had it as a long idea. This triggered back in early June on this trendline break for a heck of a move. Chartbreaker 86, Tesla, here's a little setup to monitor if it can break this downtrend line. Chartbreaker 87, Qualcomm was a long idea back there in early June, which gave a nice trade. It's pulling back now. That last high had some good MACD divergence here. So, Chartbreaker 88, SMCI, one of our subscribers asked me about this. This triggered long early last week, but that move up stalled at that supply zone. That was a good area to take some profits and pulling back. Now, it is holding this downtrend line for now. So that's your support and these moving averages. So let's look at what this KISS system is showing. So here's the KISS system right from the KISS table. So you could be following it there. The KISS system's long. It's got a stop at, current stop is, sorry guys, current stop is 758. All right. And you can see the trade's up 7.8%. So if you've been following the KISS system on SMCI, you've done well. It went long, looks like back there in May. And it did a trade, it looks like, late last year was a hell of a trade, and it did another trade. So the KISS system's been killing it on SMCI, so you could also follow that. Here's some other setups. Chartbreaker 90, Merck, nice little long setup if it can clear resistance. Chartbreaker 91, BKR, another potential long if it can clear the channel. Chartbreaker 92, AMD, it's been chopping around quite a lot lately. Here you got a kind of a little flag channel. The long would be if it can clear the channel line, get over that 166.80 area. Chartbreaker 93, AMT, here's a nice coil setting up. We like those tight coils. Chartbreaker 94, CVS, clean resistance here around 61.95 to 62. Chartbreaker 95, SP PG, Procter & Gamble, really nice little ascending triangle pattern here. Good volume on Friday, looks good. SQQQ, this is a little hedge if you're looking for a hedge, if you get a trigger off this. All right, guys, that'll do it. We'll see what happens this week. Again, quick check on futures. ES futures are up 5 points, and gold is up $1. So there you go. We'll see how things look tomorrow morning. Again, hope everyone's enjoying their weekend and their summer doldrums. So I know a lot of you are on vacation. So anyway, thank you for all your support. If you're on YouTube, please like and subscribe. Please comment. That really helps us out. We don't have enough of you guys commenting. And please consider subscribing. Anyway, take care. Enjoy the rest of your evening.